Hello, today we are going to talk about how to read a profit and loss statement for a nonprofit organization. We're going to jump right into it. So a profit and loss statement can also be called an income statement. A lot of nonprofits choose not to use the profit and loss terminology because we are nonprofits. We're not actually creating a profit, but some organizations still use that. So either way is totally fine. But what a profit and loss statement is for an organization, it's kind of like a financial report card. How is your organization performing during a specific time period? Unlike a balance sheet, it's not showing you the financial condition of your organization. It's not showing what you own, what you owe, or what others owe you. It's just giving you a snapshot during a set period of time of how your organization is financially. Most of it focuses around the profit and what is left over after deducting all of the expenses. So at the top of your statement, you're going to have the name and your time period. Typically for nonprofits, this is going to be a month, possibly a quarter, or a fiscal year. But a lot of times when your board of directors is meeting, you're meeting every month, and so your financials are going to be for the month prior to that. So it might say, let's say July 2020 is your time period up at the top. Then your two main categories under your profit and loss are your income and your expenses. So with your income, that's going to include any of the income that's coming into the organization. It can come from grants, it can come from contributions or donations, and those can be from individuals, from businesses, from service groups, faith communities. Any of those sorts of things are going to fall under that. Also, fundraising events. Let's say you have a gala or a breakfast event or a golf event. All of the fundraising events are counted as income. Some organizations have memberships that have a fee associated with them. That would be income. Contracts. Some organizations will put all of that under grants. Others will have a separate contract section. If, let's say, you have a contract with your city or your county or your state to provide a certain number of services over the year, you might put that under the contract section. A fee-for-service, not all organizations have a fee-for-service type of program. Some do. There might be a small nominal charge for some sort of service that you provide or a sliding fee scale. All of those should go under your fee-for-service category. And then finally, interest income, whether that be interest at a bank or from investments, things like that. All of those are going to get grouped under your income category. Then you have your expenses. Those are really broken down into three main areas. So first of all, you have program services, right? The core of what you're doing. So program services can include a number of different things. It could be the very, very direct expenses for a program. So for our organization, we run a crisis line. We have to pay for a phone, some technology, things like that. All of those are direct program expenses, so they're going to go under that. However, there can be some indirect cost to that as well. It also takes paper to do the crisis line. It takes internet. All of those sorts of things are program services. Part of a staff salary might go under a program service. So we couldn't run that crisis line if we didn't have a staff member overseeing the program. So part of their salary might be allocated to the program services category. So it can really encompass a whole number of different expenses. Management in general, this goes to maybe salaries for your director, maybe you have an office manager, any of that kind of bigger overhead that isn't going into a program specific expense, you're gonna put into a management and general category. And then finally, fundraising. It is very important that fundraising is broken out. A lot of different foundations, tax forms and things like that require a fundraising as a specific expense category. And so you need to know how much you are putting into that. It's usually gonna then, they'll ask for a percentage of your total budget that you've spent on fundraising. So once you have all of your expenses, you are then going to get your net income by taking your income, subtracting your expenses, and giving you your bottom line, which is your net income. It's going to be at the bottom of your balance sheet. Now, real quick, to the side of your balance sheet, you might have a couple of different columns. So as we talked about, this goes back to the time period. So you might have your month here. Again, might say July 2020. When you go down the column here, it's going to show you all of the income, expenses, and your net income just for that month. So remember, you're looking at it as a report card of your finances just for a specific period of time. So this would be for the month. Then you might have this section, year to date. So year to date, a lot of times organizations run on a different fiscal year. Their fiscal year isn't a calendar year. So maybe your fiscal year starts in October or it starts in May. But when you're looking at your year to date, you're looking at the beginning of your fiscal year up until your current month. So everything to date. So that's going to be your year to date category. And then finally, you might have your budget category in there. So that is the budget you created, you've passed through your board of directors, and you're gonna have that category because then you can compare, right? How are you doing year to date compared to your budget? How is your month looking compared to your budget? So it's a really good comparison tool. And that is just a very brief synopsis of how you read a profit and loss or an income statement.